We said markets hitting the record highs again today, even though there's weaker job data. Can the market sustain the momentum? Let's go to Brianne Gardner. She's Senior Wealth Manager, Velocity Investment Partners. Brianne, where is this lift, the latest lift in September, coming from?
Yeah, I think we saw September start off a little weak and everyone was wondering, are we going to see that September pullback? Historically, September is one of the weakest months on average, going back, to the 70s. We've seen September pull back about over 1%, 1 to 2%. So, but then have seen some momentum on earnings. And I also think on putting interest rate cuts back on the table. I think investors are excited to start seeing both the Fed and Bank of Canada, now both the Bank of Canada, about 70% chance of an interest rate cut in the September meeting for 25 basis points, and about 95% for the Fed to see a 25 basis points in the September meeting. So I think that does have, investors a little bit more optimistic to put those cuts back on the table. And I think the market's rally, really is in a little bit of a wait and see mode. I think all eyes are going to be on Thursday's inflation CPI data, and that's going to be the key to report that really could shape how confident the Fed does feel about keeping the rate cut path intact. So that is certainly something that we are watching closely.
Okay, is there anything that you see or feel is dragging a little bit more? Obviously, you mentioned we have the September 17th announcement that is kind of questionable. People think there's going to be a cut, but you want to see 100% before you kind of add that in. Is there anything else you see dragging the market down or holding it back?
Yeah, I still think, there are some risks in the mix, I would say. Inflation still a little bit sticky. Tariff headlines are starting to resurface a bit. And again, seasonal headwinds, we can't ignore those. I think we are seeing some softening in the labor market, certainly, and I know that's been talked about, and people are, finding it harder and harder to find a job. A lot of investors were spooked by Friday's job report, and we can certainly understand why that is. I think after seeing June's negative job growth that ended a 53-month streak of payroll gains, people are a little bit worried. It was the first monthly contraction since 2020 or pre-pandemic. But it's not necessarily weak enough, I don't believe, yet for the Fed or Bank of Canada, even on their job data, to consider a bigger 50-point cut at this time. So it is a little bit of a balancing act between optimism and caution. And I do believe this week's data will likely set the tone as we move into the fall.
Let's talk about some of the earnings we're seeing. Oracle just reported, so I'm looking at $7.2 billion in cloud revenue in Q1, so that's up 28%. We talk about the end of the year, usually following the first 3 quarters of the year. Do you think we're still going to have a strong ending for the tech story for 2025?
Yeah, I think if we look at the data and what expectations are for earnings, even, AI boom, tech boom, we are still expected to see consistent growth and double-digit growth out of these large tech names. So, even seeing after NVIDIA's earnings and a lot of those big companies, they have done very well. I think analysts' expectations continue to climb, though, and can they continuously achieve that? I think that growth level is something that we will watch closely. Oracle, not a stock that we do own in the portfolio. As you mentioned, a little pop after post-market. Margins we might start seeing getting squeezed a bit on the near term. I think spending too, we are going to see a lot of these big tech companies spending heavily to build kind of AI capacities. But I do see guidance and revenues continuously growing and should hold up. So for us, it is going to be more on cementing their place a lot in the AI space, in the cloud space, and what deals in M&A we're going to continue to see out of these large cap companies.
Let's talk about Apple for a moment as well. They released sort of updated products today. The phone, the i17, as well as AirPods that can now basically tell your heartbeat, gauge your heart rate. I'm wondering if this is enough, you think, to wow investors from Apple who's been lagging on AI.
Yeah, Apple is, I find, always kind of a love-hate story. They keep producing more and more, but is it enough for consumers? As you mentioned, even looking at the price target on the street, the upside potential from here, investors still see that we could see, it's hitting kind of a resistance level. You're still seeing, though, between a mix between analysts of buy and hold, a little contradiction there. For us, we did actually recently just take some profits on Apple. We still own the stock, but I do see, could be a little bit stretched. I think, as you mentioned, the iPhone 17 brings some upgrades. Yes, a faster chip, smoother screen, new colors, but is it enough for investors? Is it enough for people to spend that amount of money on a new product? Not really game changing to me, but, they keep upgrading, and that is flowing out new products. So it takes another step into the health, as you mentioned, with the blood pressure alerts. Are they leaning more into that health side and this heart rate sensing and trying to help with this improved fitness, which is a huge trend right now in society. So for our view, these launches do reinforce that Apple's really steady strategy, incremental hardware upgrades, plus deeper health and AI integration. So again, we're in a little bit of a hold right now from overall, and did really just recently trim exposure that the stock had, we believe, had stretched valuations.
Quickly on Adobe, which does report later this week and has been sort of falling behind others. What's your expectation?
Yeah, we're seeing Adobe report on Thursday. We're expecting a stable quarter, I believe, out of the stock. With steady, I think, demand in digital media and benefits really from recent price changing that are starting to show up, which is going to be great for the company. I think the market will also be watching certainly closely early signs of traction in their new AI tool as well, like Firefly and Express, which could be important growth drivers. That said, I do believe the bigger spotlight will likely be on their Adobe Max. That's in October, where investors really want to see innovation that can sustain double-digit growth over the long term. So, still fundamentally, the Adobe ranks at 8 out of 10 for us, but from a value score, lower, looking at a 3 out of 10. Price target upside on the street, though, analysts are seeing double digits, potentially 30% from here. So, but we do see a mix between buy and hold. So it is a little bit of a coin flip right now for the Adobe stock.
Brianne, I do have to leave it there. Appreciate you joining us on The Close. Brianne Gardner, Senior Wealth Manager, Velocity Investment Partner.